Our state has made the list of the top 10 markets where homes are selling above the listed price. Eden Emerald buyer's agent analyzed data from Zillow between May of 2019 and May 2024. They found nearly 38% of properties in our state sell above the listed price. And of the top 10 markets, Washington came in at number 9. New Hampshire taking the top spot with nearly 58% of homes there selling above asking. And according to the study, Wyoming is the state where properties are least likely to sell above asking price, only about 15% of them. So from mortgage rates to housing affordability, our real estate market is poised for some big changes in the year ahead. So joining us now with what exactly we need to brace for is the founder of RexMont Real Estate, Adriano Tori. Good to have you here this morning.
Thanks for having me.
Okay, so let's talk about the national real estate market. How is it shaping up for the first quarter this year?
Yes, let's dive into it. So the real estate market is seeing an increase in inventory. So basically, buyers are going to have more options to explore, and we are going to see a reduced amount of bidding wars out there, which bidding wars have been the dominating theme, for the last 2 to 3 years. So a more balanced market. Projections by the National Association of Realtors indicate that a 9% rise in home sales, existing home sales, are to occur in 2025, and an 11% increase is expected to happen in the new construction bucket. Now, with all this, mortgage rates are going to be stabilizing at around 6%. Okay. Making it easier for buyers to budget and also plan for their purchase.
Okay, so what trends are you anticipating here in our local area?
Yeah, so for the most part, we're going to see a market that is going to be higher on sales than what we had in 2024. 2024, we ended up about 68,000 units. 2025, we're going to see more activity because people have more power now to rely on an interest rate that will help them look into more into the side of stability. Basically, they'll be able to plan ahead. 2 years ago, we saw the rates, oscillating from 3% to 4%, back to 3%, then to 5%, and so people were, we're very uncertain. Right. And many of them decided to stay in the, basically sitting on the fence. But now we've seen quite a bit of activity in this last quarter. And as we transition into Q1 of 2025, we're going to see that just waiting is not going to longer be the norm. People are coming out of the woodwork, and they are ready to step forward with confidence in the market.
All right, so what should we prepare for in terms for home pricing and affordability?
So the first thing that we have to look very attentively is the budget, right? From the budget, then we need to look into the programs that are available in the market. There are many programs out there that are bringing more flexibility into our purchasing power as a home buyer and as a consumer, for our area. Also, there are many builders out there because we're going to see an increased amount of inventory in the area, in West Seattle, in Northern Seattle, in the financial center district. We're going to see also more increase in inventory in the east side as well. So as we see more of that increase of inventory, there will be builders out there that are more prompt to offer incentives to move up the inventory. And this becomes an opportunity for people, to really be more in tune to negotiate prices that are more incentivizing when it comes to looking into options.
What do you expect to drive the market in the coming year?
For the most part, it's going to be some of the things that now we are going to be more accustomed to, which is the return to the office mandates that have been basically have become effective as of January 2nd for a lot of these companies in the area. And as we see more people returning into the urban centers, the urban areas, especially we are going to see and we're starting to see in this, which are families, multi-generational families getting together, pooling resources, purchasing the larger home to be able to tap into more of an affordable payment. The other pool of buyers that we've seen in the area as well are those who are looking into an office space that have a little more leniency and flexibility with their work arrangements to create more of a hybrid, environment between home and office. But for the most part, they are, people are coming back into the city, and Seattle, is going to be a bustling and booming, area where we're going to start seeing more and more momentum. But we are not yet going to be as busy as what we saw back during COVID times, because we are about 37%, away from those numbers. And so this will be a market that will bring more stability, more predictability to the consumer, and also more options.
How could the national economy impact the housing market?
There are certain things out there that are happening. A lot of words, a lot of commentary on potential tariffs for construction material that is coming from Canada across the border, also coming from from the south of the border as well. That could potentially increase the cost of housing. Another part of it will be uncertainties in the economy with the inflation rate as well, that could impact someone's decisions into getting into housing and potentially not having enough purchasing power to break into the housing market. And so some of those factors are factors that we will have to plug into consideration. But ultimately, what is most important is that as we're seeing now the market stabilize, this really brings an opportunity. If you've been sitting out there trying to wait for a lower rate, this basically brings an opportunity to bring to the housing market with more confidence now that we are not going to be seeing more of those bidding wars.
The founder of RexMont Real Estate, Adriano Tori, thanks so much.
Thanks for having me.